Let me just tell you a little bit about my background. I have over 20 years experience in lending to small and medium-sized businesses. I worked in commercial loan departments and corporate banking groups at several different banks, including Security Pacific Bank. That's where I started my career. And I worked at Union Bank and Manufacturers Bank, as well as a few regional banks, before starting my own personal practice of credit underwriting contracting services, including starting with the SBDC network in 2008. Basically, here at the SBDC network, I provide assistance to small businesses in helping them gain access to capital, either via traditional banking programs or non-traditional finance sources. I help them prepare their loan packages and applications, as well as help them prepare business plans. Just in general, just having access to capital. The credit markets have been very tight as a result of what happened with the economic, decline during the last few years. One of the major obstacles that most businesses or small business entrepreneurs face is the credit. Their credit has suffered as a result of that, and the lack of collateral, because most banks want like dollar-for-dollar collateral support. And one other issue is they lack sometimes the funds that they need to invest in the business, because no bank wants to fund 100% of any venture. The small business person should definitely have a business plan. In addition to the business plan, they should have all their financial records prepared that include like their latest tax returns, latest financial statements if the business is operating, and they should definitely review their credit report. That's part of the financial package that would definitely be crucial and critical for the bank to review in the initial process of reviewing a loan request. In both cases of a startup business or a business that's been around, the client should know the specific amount that they want to borrow and how the loan proceeds will be used. The creditor is often reluctant to provide 100% financing to the business, especially in support of working capital. The borrower would be, in most cases, only able to get 25% of their budgeted working capital for like the year. The borrower should also be prepared to invest 10 to 50% of their into the business themselves. Especially for restaurants that require a higher amount of the investment from the borrower because of the risk to the industry. For things like real estate, the SBA has programs that could allow the borrower to only invest maybe 10%, under the SBA 504 program. But in most cases, they should be prepared to invest about 20% for real estate related transactions.